Hello there, hope you're doing great as always. Let's get into it and let's become a little bit smarter, a little bit better, learn how to invest because some of you actually privately messaged me if I could record a video here and there, and I was like, nah, not really my thing, but hey, here we are, let's give it a go. I'm not exactly that type of person. I usually prefer, writing in a little slower medium. But hey, since you requested it, here I am. So let me jump right into it and also briefly introduce myself if you don't know me. But basically, I've been investing since roughly 2017, 2018, built roughly 1.8 million portfolio since then. I'm sharing it on Twitter, basically since the past 2, 3 years there, so you can follow me. And I wrote this document here, the first six figures in the stock market, contemporary investor playbook, actually I think 3 years ago roughly, right? So this is already like a revised version. But the reason I wrote it is that, of course, lots of people try to be successful investors, and I have this little fella here, and you probably, most of you should recognize the guy, but that's a young Warren Buffett, right? And what I'm usually telling people is that, sure, like people might look up to Warren Buffett and what he's doing these days, and hey, he's buying this company here, and what he's doing, holding cash, things like that. Well, at this point, the guy is playing completely different league, like someone like me, like probably like you, we shouldn't really do what he's doing. But what we could be doing and should be quite an interesting perspective is to actually learn about, Warren Buffett and similar guys and what they did when they were building the early stages of their, empire, right? What was Warren Buffett doing when he was, 25, 30 years old, right? Learn the principles and apply them on a contemporary companies, right? So these days you don't really want to, obsess about what Warren Buffett is doing, but you want to see what people who are those couple steps ahead from you are doing, right? Let's say, hey, if I'm just starting out, I want to see what someone with six figures is doing. If I have six figures, I want to understand how someone got to seven figures, right? If I have seven figures, I need to know how that eight-figure guy is doing it, right? So there are these different stages, steps, right? And we have to, also act differently based on all of these. And so that's I actually wrote this, those couple of years ago. And back then I basically had roughly 300K in my portfolio, right? So I basically, climbed that first stack, over those first six figures and a little bit reflected, hey, because of course when we are in it, it's sometimes hard to realize what we are doing, right? Of course we live the life forward, but we can only sometimes understand it backward, right? And the things eventually start to make sense, right? And it's always, hard to understand what we are doing. But if we do a little bit of retrospection, right, understand what was going on, we can also better prepare for the future, right? And so I reflected on why those, years and years ago I started investing in the first place, right? So now I will go through some of the pieces of this document here, highlight some of the key lessons that I've learned that, if you want to follow, let's say, somewhat similar path that I walked, then you are very welcome to, take all of these ideas, apply them in your own life. And I will probably maybe split this video in two. Let's see how far we can go. Maybe, this is like a 17 pages here, going over some of the big principles and then slowly zooming in on some of the portfolio management practices, how to analyze companies. But yeah, let's get to it and let me just read through that first part because it's sometimes important to, first even realize what kind of game are we playing, right? Is this the game that we want to play? Is the game worth playing, right? Because there are so many things that we can do with our life, right? But I would definitely argue that, investing is one of the most important skills anyone can learn because it's just such a huge, leverage on our, money at the end of the day. Because let's say, if anyone, right, we probably have some work to do, right? We probably make some money there. Let's say we're making, let's call it 100K a year. And sure, okay, so I'm working at my job, making those 100K a year. So cool, I work for a decade, 2 decades, let's say. So, 20 years goes by. So 100K a year, and let's just, keep the math simple. So let's say I've just been making those 100K a year, every year. So that means over those 2 decades, I've made 2 million in earned income, right? 2 million. Okay, well, that's a reasonably, big number, right? 2 million. Okay, cool. But well, what if at the same time I'm also investing some money, right? Putting, at least 600,000, 1,500, 2,000 in the market every month, and get not just some returns in line with the market, but actually get solid results, of a competent investor who knows what they're doing, getting solid results year in, year out. Well, I can probably grow that portfolio to at minimum 2 million with those numbers, at minimum, right? So I'm spending 40, 50 hours a week at my job, and I can't find even a couple hours to actually learn how to properly invest, which is probably going to have even bigger impact over those 20 years. Well, that's a time misallocation, right? So, like anyone working, for every, let's call it, my rule of thumb, right? For every 40 hours at our regular job, we should find 4 hours for investing. 1/10 of the time with at minimum the same impact, right? Minimum. But yeah, now I've got a little bit of flame here, but yeah, like we have to understand that impact. Because at the end of the day, if you look at some of the numbers, and these numbers might already be different, but this was back when I was writing the original draft of this, so probably 3 years ago. And the facts are that there are 22 million millionaires in the US. That's a big number, right? I mean, it's not common, but it's not uncommon either. And basically every single one of them achieved that through either, or a combination of, stock market, real estate, or business. Like there are basically like these 3 basic ways how to, become wealthy. And look, if those 22 million people did it, well, you can too, right? I mean, I've done it. You can do it as well. And even more importantly, investing in the stock market is scalable, right? So once you know how, similar principles apply when you're starting, going from 0 to 6 figures, from 6 figures to 7 figures, and eventually, 8 figures, 9 figures, right? Then you just need to, expand the timeline. And the more outrageous your goals are, you just need to expand the timeline, right? And, like we should be aiming for those outrageous goals, right? Because cool, like if I want to, let's call it, 10 million, 100 million is 20, 30 years. Well, if I'm going to hit just 50 million, just 10 million, well, that's still pretty good results, right? So at least the way I'm setting my goals is always like, aim for the stars and, worst case scenario, you might land on the moon kind of thing. And I've personally chosen stocks as my personal vehicle, compared to like a business, real estate, is because it's very much accessible, right? Because when I started, I was just a student in my final year of university, right? Like I have, basically 0 to my name, right? So I couldn't buy real estate back then, and I was even in a different country, but it's a different story, right? So real estate was not an option. Business is a freaking hard, that's kind of like in business you can probably make even more, like the richest people on the earth are business owners, when you take it to the extreme, Elon Musk, Jeff Bezos, that singular bet. But it's basically, they're very much on that risky side, right? So stock market, very much accessible, right? You just need, your phone, you need some money to put into the market, and you need some time and learn, right? But again, like anyone can do it, right? 3 things: phone, some money, knowledge. That's it. And so what did happen between those, couple of years, right? Because it's also important to understand the market, how it fluctuates, and be okay with all of this, right? Because of course, when we decide to play that game and that game is worth playing, we also have to understand the rules and understand what we have to endure during those years. Because as I wrote here, right, between 2020 and 2024, the market has been all over the place. Pandemic in 2020, right, the brutal crash, sudden drop, quick V-shaped recovery, then all of the mania with all of the helicopter money, coming in, and GameStop, AMC, everyone was at home, trying to play stocks, but usually more on like that trading side and make a quick money here and there, speculation peaking in the first half of 2021. And then 2022 was kind of that year. It's like the party ended, right? All of the people vanished, and there is someone who needs to collect all of the empty bottles, right? And everything. And what 2022, basically the whole year sucked. Long drawn out bear market from January till December, and only in 23 was the recovery year, with almost the mirror opposite, right? So as we were dipping into 2022, then we started to slowly recover in 23. And of course, all of this can be exciting to experience, participate in, right? However, as a long-term investor, you want to become a stone cold shark. Learn the game, do what's necessary, and ignore everything that does not serve a purpose. Such as obsessing about news, refreshing your portfolio multiple times per day to see if your stocks are up or down. No. And if I should put this into extreme, right? Let's say when you have some people, someone who might have invested in, Tesla 10 years ago, right? Apple 10 years ago, right? Or Netflix 10 years ago, right? Well, today, those people are probably very happy and wealthy people, right? Well, why? Why is that? Well, because they've chosen the right companies, right? It did not matter who was president back then, what the interest rates were, or if there was maybe some war going on over there, right? Like there is always something to be scared of, always some doom and gloom. It did not matter at the end of the day, right? What would ask yourself, what would Warren Buffett do, right? Well, choosing good companies, right? Companies with a good cash flow, growing revenue, growing net income, right? Companies that, we buy them when they are like this and let them grow into this, right? That's why Netflix is much more valuable today than it was 10 years ago, because it became more impactful, right? That's why Tesla is more valuable, because back then, 10 years ago, it was barely, ramping up Model 3, right? It wasn't sure if it succeeds or not. Now they are, even that they are having, some of the problems these days, they are making, millions of cars, and that got reflected in that stock price, right? So you want to establish your own process, so you can do a lot with the minimum time invested as well, right? Because all of this choice of the individual companies, like investing should not take crazy amount of time, right? If we strip off what's not essential and just focus on what's making us most money, right? Because at the end of the day, we still have our, let's say daily job, all of the other stuff. We probably have family, maybe some hobbies, right? We also want to, keep all of the time for all of the other stuff, right? So stock market is kind of like a semi-passive way, right? Like it requires your attention, yes, and you have to, keep in touch with your portfolio. You have to keep reevaluating if you are in the right direction, but it shouldn't be that, like obsessing about it, having it open all the time, right? Because then it's easy to kind of get, sucked into all of the madness of the market, right? And listening to 10 different sources and 20 different opinions. No, we should be able to make our own decisions, right? We want to control our own portfolio. Do not let our portfolio control us, right? We want to make our own decision, have high conviction, and the way to achieve that is through knowledge, experience, right? Investing is a game of decades, which, on one hand, it kind of sucks, right? Because everyone wants to get rich quick. But if you want to get immensely wealthy, well, the decade or two, that's little price to pay. And so when you're in Cabo in 2040 and look back and, you realize it was worth it to stay consistent and persistent. And so what kind of game are we even playing? Well, how I would characterize my way of investing would be contemporary long-term investing, right? So once again, it's like, you can think about it, blend of Warren Buffett, Peter Lynch, maybe you can, bring Bill Ackman to the mix, of course, Jeremy from financial education as well, right? And taking those timeless principles, from all of those different sources and simply apply them on contemporary companies. Because, and once again, hammering the same principle over and again, kind of quote that I've come up with, and I think this is quite a powerful one. Stock market was invented to capitalize on people's greed, envy, and desire. But it is exploited by those that are patient, diligent, and resilient, right? So it's one again this, like the Wall Street and having the price targets, and they kind of want you to be active and move in and out of the positions, collect the fees. But if you actually learn what to do, you can a little bit free yourself from all of this madness, right? That doesn't mean that it's easy. You have to learn the process. You have to learn lots of hard skills, right? Accounting, language of business, of course, learn how to make the projections, how to understand income statement, balance sheet, so you don't fall into some of the traps, making sure that you don't invest in some company with some, obvious red flags, right? Which also many people don't do, right? They just hear something on CNBC and just like, oh, okay, this guy is talking about it, so I'm just going to invest. Well, it's not easy as that, right? Most of the people, when they are, let's say, buying a car, they spend freaking, weeks, poring over all of the specs and everything. Okay, should I get this car or this car? Then, check some reviews, and is the car, efficient? How is the maintenance and everything? And those same people then throw, 5, 10, 15K into stock just because someone, talked about it on CNBC. Tough luck, right? So the same level of diligence, we need to do with stocks. Because at the end of the day, stock market is the greatest wealth multiplier, right? And there are also so many ways how to make money in it, right? And even more how to lose some. So the number one thing is always to decide which market game you want to participate in and understand the rules. Because sure, there are some people who are doing some day trading, swing trading, play with some, speculative small companies, penny stocks. Of course, some people, if you want to go that other way, bonds, warrants, options, other more complex instruments. Cool. And sure, like if some people want to go into these avenues, fair enough, right? But what, again, worked for me and what I found to be the most optimal way is that, long-term, level-headed approach to investing. So once again, imagine if Warren Buffett, Peter Lynch were born today, right? What would they be doing? And that's the mindset I basically adopted when I started investing back in 2017. And that mindset that helped me to cross, basically 6 figures in just 3 years, right? So from 0 to 100K without any formal knowledge, right? Because at the end of the day, you can't really learn investing from university or something like that. Investing, it's an apprenticeship, right? People learn from some of the, of course, Warren Buffett, for example, learned from Benjamin Graham, right? Now people are learning from Warren Buffett, and you can, see how other successful people are doing it, right? So you want to be an apprentice, right? Same as when, I don't know, you want to become an electrician, you have to walk with that older guy who kind of shows you how it's done so you don't accidentally step on the live wire, right? Same here. So you want to observe what the greats are doing or what they did in their early days and emulate those principles, right? Principles. And then it's also maybe worth noting one more important point. Why does the market go up? Well, as a long-term investor, you are rewarded for having your capital connected, tied in companies, right? And those companies, as we touched upon before, right? They produce real stuff, provide services, sell products. They basically create value, right? If there was no Tesla, there would be no millions of electric cars on the road, right? Like, companies are valuable because they take something less valuable and it becomes more valuable, right? And through that process, system, companies are a collection of people, processes, right? And they become more valuable. So in a very simple terms, companies that increase their revenue, profits, free cash flow, also get more valuable, right? So over long term, that basically business and the stock price are tied, right? Over long term. Of course, short term, anything can happen, right? With lots of the market sentiment and short term moves and macroeconomy and everything. But over long term, if the business becomes more powerful, better, well, the stock price will follow, right? And that simple principle is the cornerstone, right? Of course, now we have to, go actually those couple layers deeper, understand all of these, numbers, understand how to analyze business, which in itself would take, hours of learning. Here it's kind of just the basic principles. But yeah, that's it, right? So, and of course, with the market overall, now if we get a little bit into that macroeconomy, right? Of course, the Fed is printing money, let's call it what it is. So basically, inflation props up the value of the assets, economy and productivity improves, government collects taxes from gains, right? So basically, like everyone is incentivized to keep the stock market going, right? So the game is basically rigged ever so slightly in the favor of investor, right? And so you simply get a solid result just by investing and staying invested over a long time, right? Because I mean, even statistically speaking, right, 3 out of 4 years end up in the green. So, by being default bullish, being default, long market, you're basically winning by default, right? And sure, if you become more competent and understand small nuances, you can do even better and better and better, right? But this is the baseline, right? If you just stay invested, you'll do well over time. So, and that's it, right? Building great things, it takes time. The value in the stock market is not created by speculation on the prices or trying to get the next hot thing or, some exciting story about, this new industry here, It is created by the combination of people, machines, and processes, right? That's why the companies are valuable. Companies you own create great things. They improve lives. And those companies grow. And the value of our small stake, value of our shares grows with them. And that's the merit of investing, right? Proper allocation of capital into the hands of people who know what they're doing, right? You don't want to invest in a company that's some, bloated bureaucracy, who knows what they're doing, inefficient. Those companies, sure, sometimes they might be, undervalued, you might make some money there, but you'll most likely make the most money with the companies that are good, right? Companies that work efficiently, companies with people who are passionate, right? People who are doing the work that's required, right? So you're kind of tying your future with those people, right? If you invest in a company, you invest in obviously the CEO, the C-suite, right? The CFO and everything. But you're also basically investing in all of those layers underneath, right? You're investing in those employees, in those workers here that might be on the regular line or in that office clerk there. Like there is that connection, right? So you basically want to invest in those good companies, good management, and basically get out of their way, right? So being default bullish allows us to care a little bit less about all of the short-term whims and just focus on what's behind the ticker symbol, right? So, and sure, sometimes it might happen that you buy a great company and there is some short-term, market fluctuation, potentially some crash, right? There are some people who might have bought great companies, in 2020 before the market dip. Sure, like I was invested back then in 2020, right? My portfolio dropped, 30-40%, but I had some money on the sidelines. I put more money in and I came victorious on the other side, right? That's it. Just continue, right? Keep stacking. So, and basically what I want to say is that nobody can successfully predict, those market movements, crashes and everything. So it's, close to impossible to predict the market, the economy, right? Because there are just so many variables and, interest rates once again, and now we are having, of course, big discussion about tariffs and everything. Like there are just so many variables, close to impossible to predict. But if we actually focus on individual companies, well, we have a somewhat solid chance to understand them, right? Because if you take some really simple companies, right? For example, Pepsi, right? Well, you can see how much they've sold, this year, last year, the year before. And you can, with a reasonable, margin of error, you can predict what they're going to do next year, the year after, right? And suddenly you don't have to figure out the whole world, right? You just have to figure out that one company, which is not unreasonable to have a decent prediction, right? And based on then figure out, okay, is this company that I should buy, right? Much easier game to play than try to figure out the whole market. And so yeah, it's really just about choosing the right companies. And of course, as a long-term investor, focus on individual companies, we should be aiming and we should achieve that compounded annual growth rate of 20%, right? that should be our benchmark, 20% plus, right? Of course, the market itself usually does those 7, 8, 9%, something along these lines, cool. But if we are at least somewhat competent investor, we should be getting to those 15% consistently over a long period of time, at least. And a solid investor who knows what they're doing, and by knows what they're doing, again, I mean the whole stack, right? Understand the balance sheet, income statement, portfolio management, asset allocation, position sizing, right? So there are all of these sub skills, and yeah, that takes time. Like we are talking about putting some serious effort into it, right? And like really learn it, right? Because let's say when someone wants to again become not an electrician, let's say doctor today, right? Okay, well that's a couple of years of like serious work to become a doctor, right? And people think that they can become a good investor just by watching a little bit of CNBC. Tough luck. Good news, I would say being an investor is probably easier than becoming a doctor, right? So, become a competent investor depending how much time we can allocate. But hey, like when you see people in like just look at my portfolio, right? 1.8 million on a good day. How long did it take? 8 years? I mean, not bad of a trade-off, right? To become, serious, spend some real time on it so, I mean, it was worth it for me, at least. So, yeah, and that's the name of the game, right? So I think we should probably stop it here. It's already getting quite a long video, so I will just continue with this probably tomorrow or sometime later. We only managed to get 3 pages done, but I think this is a good place to stop, right? Because this is the baseline, right? Why we are investing, what we should expect, and why it matters, and why it's worth doing, right? So that's probably the most important point I want to leave you with. Because yeah, it takes time, it takes effort, but in 10, 15 years, well, you'll be glad that you've put the time and effort in. So yeah, appreciate you all. Thanks, take care.